And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Hello, everybody. Welcome to Coach's Playbook, the Young Guns edition. Hogue is out today, and young in this case means sometime in your mid-30s. Today is Tuesday, November
Unless
30th.
you're JD.
Unless you're JD. Oh, yeah, he's in his 20s. Also known as the day that Jerome Powell himself, Thanos, snapped the market a couple hours ago. That was fun. It must be something to have that sort of...
Hold up just a second, guys.
Oh, no.
Something just happened. I am fixing the screen here. There we go. Sorry about that. I don't know how that happened.
Did they get to hear the beginning of that?
Yeah, they could hear everything. It just started showing a chart instead of our faces.
Okay, perfect. Then I won't make the same dumb jokes again and again. Today, we're talking about a topic that people have asked us about, specifically where our favorite indicators that we use day in and day out trading. And we'll get to that. But first, Mick, I understand you have someone you'd like to send regards to.
I do, yeah. Big shout out to Sang Jung Wei, putting up a nice big day, $2,700 trading the NASDAQ. So
Trade
good
the
job.
NASDAQ. Yeah, as mentioned a little bit earlier, there's been a ton of movement in the NASDAQ today. And I think with some of these indicators, I'll have a chance to show in real time kind of what's playing into those. But today, usually we'd send it to the elder statesman Hogue. But Dan, I thought maybe today we could start with you with the topic. What indicator do you look at?
Well, I look at a bunch of different ones. I'm going to talk about two specific ones that really are important to me, not necessarily indicators, but just ways of viewing the market themselves. First and foremost, if you guys have ever seen me on the forecast or the recap, you pretty much know a lot of what I'm looking at. I am a big levels guy. I think levels to me are really what I'm utilizing for my trading. And some of the things that I use for level definition is first and foremost, number one thing. And I got a feeling every one of you guys, probably it's one of the first things you look at every single day. And every trader professionally I know looks at the first thing every single, usually they know even the day before. It's settlement price. Settlement price to me is one of the most important levels. Why? Well, number one, it was the very first thing ever taught to me. When I first started looking at markets and learning about them and questioning about them, the first thing that was taught to me was need to know where settlement price is. If the market's away from settlement price, hey, see if that market's going to start moving towards settlement price. That was really my introduction into trading. It is my ace in my pocket when it comes to trades. If the market opens up away, the first thing I'm looking for is seeing, can this market retrace back to settlement price or close that gap to settlement price? Reason being, settlement is so important, not just because they say it's important, but because there's a lot more that goes into it. And I think the biggest reason behind why it's so important is any position trader that carries a position from the prior day into the new trading day. The end of that day, what they do is they wait for prelim settles to come out. They input that settlement into their software, which is then going to kick out a current standing P&L. So their position, their net position overall is based on that prior day settlement price. So let's say their net position is long and we open up below settlement price. For them to get back in the money, they want to see that market start working towards settlement. They're going to start to make some inventory adjustments. They're going to start to kind of push that market towards settlement. That's what they want to see. So a lot of traders, that's what we're looking at. We're trying to see, is there opportunity from settlement price? So then in the flip side, let's say their net position is long and the market opens up well above settlement price. They're going to start peeling off, probably locking in some of those profits, maybe even towards the end of the week. They're going to start to think through those things. So that to me is why settlement is pivotal.
Yeah,
Jack, I see you opening your mouth there.
Yeah, that's usually when I want to say something, but in this case, it's important. If you want to learn a lot more about that, Dan and I talked for about a half an hour about this on the recap on Thursday. So that would be if you want to get way more into depth and maybe even need to know, but settlements are important, as Dan said. So when we chose this topic yesterday, I asked everyone to pick what their favorite indicator was and put it into our Slack channel. And Mick went first and proceeded to name the eight indicators. And I thought about it for like several hours. Like, I don't want to talk about anything that's not on that list. So we made him break it up. So Mick, after all that, what did you choose as your favorite indicator and how do you use it?
Yeah, we got to look at my notes here and narrow down since you guys are limiting me. Well, as far as indicators go, I mean, there's tons and tons of indicators out there. I think a lot of them are just garbage. You need to try out different indicators, study the market, see if there's anything you can pick up from those indicators, and then use them. Myself personally, I like keeping things simple. I've got some simple moving averages on my charts. I like looking at so I know someone else is going to talk about the bigger 50, 100-day, 200-day moving averages.
Yeah, I am. So back off.
All right, I'm done. I was announcing it for the viewers out there that you'll be talking about them. But I keep a 5-day simple moving average and a 20-period simple moving average on my charts. Just some things that I like, and then I keep a couple oscillators to help me out with buy divergences, sell divergences, momentum kind of stuff. So I keep it really simple. I'd rather look at the price action on the charts and chart patterns. I know Danny was talking about settlement price. I really, you got to respect settlement price. I personally look towards more so previous days high and previous days low. It's not really an indicator, but it's what we have on our chart. And I like those previous days high, previous days low for being able to get a little view into whether or not we're going to have price expansion to the upside or the downside, or if we're just going to test those levels and then come back towards settlement or something like that. So that's what I look at. I keep it simple. I've tried so many different indicators out there. A lot of them look pretty cool, but I think they look great. Yeah, and you could really mess up your charts with a lot of those things. So I keep the oscillators, the moving averages, and then I like doing a lot of annotating on my charts too. I put boxes around consolidation areas, trend lines, make little notes, and that's it for me.
That's a great idea. And for people that are maybe a little bit getting started out there, when you're talking about the oscillators you use, would you mind just elaborating a little bit on kind of what those are or like what you'd be looking at?
Sure. So like what an oscillator is, like as far as gauging momentum, or are you looking for the periods?
Just like a brief overview so they know what we're talking about beyond just oscillator. I don't know if there's people getting started out there or not.
Sure. Stochastics, oscillators. So I use those to help me gauge momentum. And I think that the times where I find them most useful is when you might see prices making a new high or a new low. And then your oscillator does not make a new high or new low, saying that, while we might have made new highs, the momentum didn't really make new highs on the chart. And that's where I, get those divergences from. So I like when those things line up, or actually when they don't line up, I should say, when you've got price making new highs, but the momentum doesn't. That can kind of lead me to believe that, we might have a little bit of a turnaround to the downside or something like that. And to elaborate a little bit more, I use these on a daily chart. They're on all my charts, but I only apply any analysis to the daily chart. I don't really care what my what a oscillator or a moving average is showing on a 15-minute chart. It means nothing to me. So I apply all that stuff to dailies.
I think like the most important thing that I took from what you said there earlier, you were talking about how you like to annotate your chart and take notes. And I think that that's a great habit to get into, if for nothing else, so that you remember. You can only get so much information by looking back at just charts. It's not going to tell you how you felt or what you did or why you made a trade or something like that. So I think that's really crucial stuff to have in there. And it's individual to you. It's the thing that's going to give kind of you any edge versus the same popular indicators that every trader's looking at, which when I get to mine, every trader's looking at what I'm talking about. But you need something that's specific to you and your trading. So I think that's a really important habit to pick up. JD, lay it on us.
What's up, guys? Mick, I think you and I probably went to the same trading school. I believe in the same thing. Hogue has an anagram or an acronym for it, KISS. Keep it simple, stupid. I hear him say that all the time, but that's how I like to keep my charts also. I don't muddy them up with a whole lot of stuff. I keep a handful of moving averages on there, 5 period, 10, 20, and a 50. I look at the VWAP. I have a slow stochastic indicator also, oscillator. I look at those for the same way Mick just described it on a daily chart, looking for overbought, oversold conditions or potential overbought, oversold conditions. Just because an oscillator is above 80 doesn't necessarily mean it's overbought. It could keep going higher. It could keep going lower below 20, but you're looking for potential future moves. I use the moving averages for they're great at determining direction, confirming direction, identifying trend. They could even be an early indicator of a possible change in direction. That's how I use those. And price just has a tendency to gravitate towards those areas and trade around them all day long. So I love looking at them. I know how much we hate saying support and resistance here, but
areas of interest.
Areas of interest, congestion areas. That's what I'm looking at with those. And then I'll draw a bunch of lines too. I'm a big fan of chart patterns, so I'll draw lines until something pops out and then clear the whole slate again and start drawing over. I'm always looking for a potential pattern also. So that's how I do it.
Yeah, some of those things you mentioned, I kind of view, and tell me if you guys think differently. Something like VWAP, which stands for volume weighted average. Oh, sorry, what is it?
Volume weighted average price. Yeah.
Yeah,
you were almost there.
Yeah, average price. It's kind of similar. The idea behind it's a little bit similar to what Dan's talking about with settles, where it's something that traders are looking at to come back to because when the big boys and girls are out there placing huge orders, I don't know if it's still this way, but a lot of how they're judged on performance has to do with like what you did in relation to VWAP, right? So if it's above that, there might be more pressure, and if it's below that, there might be more. I'm going to talk about the simplest of all, which are the big moving averages, which I always have 50 and 200 days. Once again, I don't really use it on anything less than that. I think it's crucial, no matter what you're trading, to be aware of those, because those are the sorts of levels that people are looking at all over the world, and it's a self-fulfilling prophecy. That's why they tend to be, as we said, areas of interest all the time. I mean, I just have like an ES chart pulled up right now, but you see things constantly turning around, obviously, because the market's done nothing but going up. The 50-day is just always higher than the 200-day, and it's above that. But right now, the ES after the Powell news today is getting down close to that over at, I got it at like 45.30 right now, being the 50-day moving average. And if it crosses that, that'd be interesting because it hasn't done that too often in this constant grind higher. So everyone around the world is looking at 50 and 200. So it's an important spot. So you got to be aware of it. Does anyone have anything to add on that specifically?
Yeah, well, I wanted to touch on one thing prior to that when you're talking about VWAP, and something that I find really interesting because it is an indicator I use. I don't really use it for trade execution. I use it more for accountability in my trading. So I run the standard deviations off of VWAP, and really my thing with that is if I start to recognize that I'm looking for an opportunity, but yet market's trading at VWAP, I'm actually using that as a chance to sit on my hands. But if I see an opportunity and we're near a deviation to the high side, hey, then I like this. Okay, I've got an opportunity here. I'm away from VWAP, kind of away from that centered price. That's kind of how I refer to it for myself. So VWAP for me is not really an indication to take a trade. Rather, it's an indication to, hey, this probably isn't a good trade, or yeah, I think we're in an okay position to take that trade.
That's cool. So yeah, you're kind of using them like Bollinger Bands or stuff like that. Yeah, no, I think that's a great way to use it. Yeah, you don't want to just use VWAP's always going to be in the middle of whatever happens pretty much. So it's not something you can really use to be a retail trader and trade, but I like that you use it to inform things. Now, to go back to probably the overarching thing of this with keeping it simple, the 4 or 5 things we talked about here are what everyone's looking at. And so I think they are important. And as Dan mentioned, and Mick, there's hundreds, thousands, probably tens of thousands, 100,000, I don't know, indicators out there. Everyone makes their own indicators and stuff like that. They're unnecessary, and you clutter up your charts in such a way that I always knew when I was trading at the firm that the people that tended to be not trading well sometimes were compensating with more screens, more indicators. It became a thing of like, well, if I can't make money, I'm going to be the guy in here that has 16 screens and 400 Bollinger Bands on everything. And I'm not going to lie, it looked cool. It looked like you were like a little like geodome, but you know what? You don't need that. It's just superfluous stuff, right? I think especially when you get, unless you're some side of like genius who's coming up with your own thing that you know works, some of these indicators that no one's looking at, they're probably not looking at them for a reason, right? They're probably not that helpful. So I would first try and do it with just the 4 or 5 things we're talking about here and see if you can find success that way. And if you're not finding success, it's probably not because you have the wrong indicators at that point. You opened your mouth, Mick.
Yeah, I have a question for you guys. I was thinking back when I started trading and what indicators I kept up on my platforms then versus what I have now. They're not the same. I was just kind of curious, like what you guys started with. I use some Bollinger Bands, RSI, Keltner channels, which I still like. I don't keep them on my charts anymore, but I think they're good for if you're on the shorter time frame, day trading and trying to catch a piece of the trend. What did you guys use, and are they the same that you're using now?
Well, I use a lot of things similar to like Bollinger Bands and things like that, but also we were doing a different kind of trading that was much more fading than anything else, right? So we weren't looking for like a breakout to then put something on. It was more seeing like, how weird is this getting before it's like, oh, this is something new, retreat, puke, buy. So it was sort of a different set of things we were looking at. Dan?
I was similar. I mean, I came from the options world. That's where I started. There's no such thing as indicators in the options world for the most part. You're basing everything based off your execution, based off your theoreticals and volatility at the time. So when I kind of stepped away from that, really just focused on the future side, I had an understanding of already how the futures market worked because everything was hedged based off the futures market. And so that's really where it started. So I kind of just kept some of the same stuff I'm using with options, really. You know, it was settlement price. That one's key to me. And as I've grown, I've kind of added as opposed to taken away. So I really just started with settlement price and kind of built from there.
I think sometimes people get a little bit, there are very smart people in, say, algorithmic trading that are doing some wild things, but overall, the vast majority of what we would call the algos that are out there that are going wild in the market all the time, they're just following order flow and momentum, right? The indicators are important. I have always seen indicators as, like Hogue says, areas of importance. Like, watch out here because this can be the turn or go through. But ultimately, I think that most of the good traders that I've seen, or the algorithmic programs too, are just chasing momentum or doing calculations with the order flow, basically, right? I don't think there's a lot of level type stuff going on there.
We got a quick question here from Hamza, but real quick, I want to say a little subconscious PK, Dante, Mr. Shines, Mr. Channel, but Hamza's asking, have any of us used the ADL indicator? Saying that the technical analysis on the ADL instead of the instrument is a really powerful tool. Have any of you guys ever used that? I can't say I have.
I've not heard of it. I don't know what
I'm not familiar with that one
stands for.
A cumulative distribution is a volume-based indicator. Well, I don't think this is where they want me to like read Investopedia on here.
So I'm going to guess you haven't used it, Jack.
No, of course not. No, but I'm like, I'd be interested in it. Like like the name of it, but look it up for next week. I might have a better answer.
One thing I've kind of just noticed sitting here in this conversation, obviously we've all talked about indicators we use, but really it's not so much about trade execution based off indicators. Indicators has really been kind of confirmation for some of the things that we're looking at, or points us in a direction, but it's not an execution tool. And I think that's the key here with most indicators out there. It's really not there to go, hey, these two cross, that's a signal to sell, or these two cross, that's a signal to buy. That's really not how indicators are supposed to be used. You really want to be using them to help kind of create confirmations based off of your studies within that charting. For me, one of my big things, these guys talking about moving averages and trend lines. If you've seen, I draw trend lines, and if my trend line or, my channel that I've defined kind of comes into play with, let's say, a 20 EMA, then I'm looking at an opportunity. Okay, I got confirmation. I'm on the low side of a channel. I'm approaching a 20 EMA. Hey, here's a good chance for trade execution. But to me, it's not really so much about, hey, as soon as it gets to this right here, or these two things happen, the stars aligned and I'm trading. It's really taking a lot more information than just that indicator itself.
Yeah, I think that's probably a good way to think about it. Well, now I'm like fascinated by looking up this ADL.
I'm gonna go on. I'm gonna go look it up myself.
Are we all doing the same thing? Did we all Google ADL as soon as that question came up?
Yeah,
My keyboard's too far for me.
I'm holding off until after the video.
Perfect. Yeah, there's nothing worse than watching like 4 people talk while they're looking at a different screen, reading it back and forth because you see the eyes moving, which I'm sure is the worst. But I think that's probably a good place to leave it for now, unless there's any other questions, Dan.
No, that was it. Just some great comments in there. And thanks everybody for commenting. Don't ever hesitate to bring in those questions if you have more.
Yeah. Well, you got a quote for us, or
I do. It's from
you gotta make it beg.
Wallace Waddles. I have no clue who that is, but I like the name and it was a good quote. It is essential to have good tools, but it is also essential that the tools should be used in the right way.
Yeah, that's really good. I mean, that's 90% of the battle right there.
Right.
The encyclopedic knowledge of like certain indicators is going to get you too far compared to just knowing how to use one or something like that. Cool. Well, this is where I usually send it over to Hogue, so I don't have the same gravitas, but hope everyone out there has a nice rest of the week. Hope you're staying safe in these markets. Hope you're succeeding in them too. So until next time, trade well. We'll see you then.